Morning, Wednesday the 6th of March. I'm looking at the pound versus the Swiss franc. It's been quite a good market to trade lately. I talked about potential for the market to head lower yesterday and test support down here. Now the support, well, we bounced above it, so really we had no chance to buy into it, to be fair. I didn't have 131.08 as a buying opportunity. I was looking for it more down at 130.90, 130.80. Anyway, we have rallied up. So yes, the bounce might be in, the rally might be on. What concerns me is on the weekly chart, we have strong 200-week moving average resistance. This is the red line here. It worked perfectly last year, and I'm wondering if it's going to work perfectly again this year. It worked also pretty perfectly in 2016 when we topped here and at the beginning of 2016. So these moving averages really are worth paying attention to on the weekly chart. Didn't do so well in 2015, to be fair. This is what concerns me. The longer term charts are always more important than the short term charts. So if we get anywhere up near 133.00, 133.30, it's probably worth a short just to see if that 200-day moving average does reverse. You want a fairly wide stop because, of course, you could easily pop up 50 pips above it, just like we did here last year. And how much was that margin of error? 137.80, call it. We went up to 138.55. So you want a small position to start with, just in case we do blip above it. You know, even 100 pips on this chart wouldn't be much. And then see if we do reverse and go lower. We can always add to the short position on a break of shorter term support. So in the meantime, so for now, we've got to watch 130.90, 130.80, which is good support, and watch that sort of 133.00, 133.50 resistance. We could get a double top here, don't forget. 133.30, if we get a nice double top up there, that would be a little sell signal around that 200-week moving average as well. So it's worth watching this. We should get some decent moves right now. Unless you managed to buy it yesterday, I wouldn't put a position on. Trying to find something to do with the euro. It's been really difficult. The euro's just been moving sideways, but against the New Zealand dollar, we're hitting some decent moving average resistance. 166.92 is the 500-week moving average. 167.17 is the 100-week moving average. So around 167.00, we certainly have decent resistance, and we've also got a little trend line going back almost 2 months. Now, where does that come in? That comes in just below 166.00. Not really. It's around 167.00. So look, if you're looking for something to do, this is worth a little punt. Selling it around 167.00, 167.10, shall we say. You could stop above. You're going to really need to stop above 167.50. I'd rather see a tighter stop than that. But bearing in mind the levels on the weekly chart, again, 40-50 pips isn't really a huge margin of error. So yep, that's the trade I would suggest, selling it around the 167.00, 167.10, stop above 167.50. If it works, it should be a good trade. We should break below 166.00 would pretty much be the first stop. 166.10, 166.00, and a break below this week's low at 165.97 would signal further losses, and we could even get down as far as 165.40. 165.45, shall we say? So the risk reward is worth having a go on that one. With the majors being pretty boring, yen, euro, some of the other majors being pretty dull, I've been looking at other markets. So this is the dollar versus the Norwegian kroner, and I talked about a potential break above this trend line, which should continue the bullish momentum. We're in a really nice strong bull trend, as you see. You remember yesterday I talked about how we bounced off the 100-day moving average nicely to tackle this trend line. I actually got out of my position yesterday when we hit the trend line, so I'm not long, but I really should be looking at buying back into this because we're breaking above yesterday's high at 868.45. We've reached 868.92. We've got the trend line here around 867.90, call it 868.00. So it does look like we're getting a bullish breakout, and bearing in mind we're trading with the trend and the moving averages are pretty much pointing higher, certainly the 100 and 200-day moving average. It looks good on the weekly chart. The short-term moving averages are certainly very positive. So, yeah, I mean, if we can buy it around anywhere down to 68.00, where would I put a stop? I guess you've got to stop below. It's tricky, isn't it? It's tricky. Hang on. Trying to find something on the hourly chart to give me an idea of where I should put a stop. We've got this little spike high up at 867.70. I guess that's going to be a very tight stop. You might want to put it a little bit lower than that, but that would be a rough guide for you. I would suggest maybe below 86,750. Right, big theme of my video yesterday was buying the yen. Looks like the yen's going to strengthen. It certainly did strengthen yesterday. You can see against the Canadian dollar now we're breaking below this trend line. So this is further negative or further positive signals for the yen against the Canadian. If you're not short already, you might want to think about getting short this pair. Dollar yen, we have topped out just below the 200-week moving average at 112.30. You'll remember I was talking about this potential for a move to the downside yesterday. Well, actually, we actually headed up to 112.12, not close enough to 112.30. We missed it, well, by 20 pips is not a big deal, is it? So if you're starting to sell into the dollar yen, I think that's a good strategy. I think we could turn lower. We are overbought. We need a bit of a correction to the downside. We have rejected the 200-week moving average. Well, so far we have anyway. We did yesterday with this little spike higher, and still a blue candle, but it's not that long upper wick gives me some confidence in calling the market lower. Euro yen dived yesterday. I talked about this resistance up here, you'll remember yesterday. So pleased to see the market lower as expected. Stochastics on the daily chart pointing to further losses. What we're seeing on the weekly chart, oh yeah, that 200-week moving average, we've really rejected that now as we come down this week. So a long yen play is starting to work, which is good news for the pound versus the yen. Also looking quite negative. We rejected the 500-week moving average, which, as you see, worked pretty well over the last few months. So not a huge surprise that we're turning lower there. What we're seeing on the daily chart, we've got a little bit of resistance joined from the trend line joining the September, October and November highs. We've got the negative candle that we saw, let me see now, that will be Monday. Negative candle there, the spike up, the red body. Yesterday, not so much of a negative candle to be fair, but it looks like we're going lower today as I speak anyway. So I do think that stochastics looking more negative, turning lower, pointing down. It does look like we're going to get a correction in the pound versus the yen as well. So yeah, strong yen, it's working. I hope you managed to get on to buy the yen against something yesterday. Gold collapsed. We were short gold. It's worked like a dream. I don't know if you're still short gold, but it still does look like it will go lower towards support in the mid 1270 area. 1276, 1273 looks pretty good. We've got the 100-week moving average there. We've also got some good support from Fibonacci confluence down here around 1276, 1275. We've got the 500-day moving average at 1272. So that mid to low 1270 area looks pretty good. We're getting oversold. Don't forget, we are still in a bull trend in gold. Looking at the daily chart, we've been in a bull trend since August, so this could just be a correction in the bull trend. It is worth trying along with a stop below 1265. If you can do that, that looks like a worthwhile trade. Silver's a bit more tricky. We're holding the 100-day moving average, but there's nothing really else down here to tell me to get long yet. We've lost 50% of the gains from November. Very, very sharp sell-off. I wouldn't say the 50% fib is a particularly strong support level, so I wouldn't rule out a bounce, but I think a long in silver is a little bit risky at the moment. There's nothing on the weekly chart to tell me to buy it yet. So what I'm going to say is a bounce would not surprise me. We're getting oversold in what could be a developing bull trend. This bull trend is obviously nowhere near as nice as the gold bull trend, but I'm not going to buy into a long yet in this. I'm going to wait for a long in the gold. I think that looks a lot safer. WTI crude has rejected the 500-day moving average, that green line that you see there. So that's looking quite negative, and we've got some big negative candles in this one as well. Some big red body candle appearing. So I'm wondering, is this a rounding top here? The 100-day moving average is still heading lower. Then look at this short-term chart. Is this a head and shoulders top on the 1 hour chart? I think it could be. So we've got a clear neckline which is holding beautifully around 5600. So a sustained break below 5600 could be a sell signal for this head and shoulders top in oil, and we could head down to, let's have a look. We could drop 200 points. We could hit 55.20 or we could hit 54.20, the low $54 area anyway, on a break below 5600. So that trade could well be worthwhile giving it a go. I would say if you do celebrate below 5600, you're going to need a sort of 50-60 point stop. I would put a stop above the 100-hour moving average, which is, call it 56.70. It's just below 56.70. So if you can stomach that sort of trade, risking 70 odd pips to make 100 or even 200, that might be something you want to consider. Canadian versus the US dollar versus the Canadian has broken out of this little wedge, triangle, whatever you want to call it, pattern. So we're heading higher now. Looks pretty positive. Weekly chart looks good. We need to get through 133.75. I talked about this yesterday, so it's not. I don't think it's a huge surprise that we're heading higher after this breakout. We held the 100-day moving average once we've broken above it. So dollar looking pretty strong against a lot of currencies, certainly against the Canadian. Looks like he's got further room to the upside. I guess a weaker oil price might help the Canadian dollar to head lower as well. So we'll see if that one works out. If you're long, I would be happy to be holding that long position. You obviously do need to break above this peak, which is at 133.75. Where are we now? We've been to 133.76 as I talk. So yeah, clearly that needs to be broken for the next leg higher. On the subject of a stronger US dollar, the Aussie dollar has lost ground against the US dollar. We've broken below the February low at 70.50. I talked about that being a sell signal in the Aussie report. So we've clearly broken that, and it looks like the dollar can continue to strengthen against the Aussie. So the Aussie does look like it can continue lower. We're getting a little bit oversold, but nothing serious, so that certainly wouldn't deter me from being short this short. Oh, don't know what's going on with my candles there. They've turned into bars.